Hi guys, good morning, good day. How are you today? Vladimir here, and this is the live daily market review, 16th of August 2017. Ooh, almost got confused the years. I'm sorry for my voice. I had real problems with the voice during the weekend, and I could not record my weekly video. And also yesterday. Now only recovering. I trying to talk loud. I know it sounds still not the best. Sorry for that, guys. But at least I can speak today, so I can record this video for you. So I hope you like it. Don't get scared by the balloons behind me. That's my present for my kids for my birthday. I'm getting old. Um, so they surprised me this morning and gave me these balloons, which is amazing, of course. And also, let me show you here. Take a look on this beautiful. You see that? That's also a gift from them. Two of my boys. The best feeling ever. So, we have a very important day today, an FOMC. The market is waiting to see what will or will not the Fed be able to hint on the coming decisions, rate decisions. The next one to be a bit before 11th of October, if I remember correct. So it actually should be. I don't remember the exact date. Anyway, what will the Fed say about coming rates, if they will be able to increase the rates or not? According to the latest data, the chances for that are low. And based on what the Fed will say today and hint what's going to happen, accordingly the direction should be chosen. I don't think it will affect the market too much. I think we are still in the recovering period for the dollar. Most likely it's not going to last for too long, but it is a recovering period, and I believe this is what's going to remain here for a while. And let's go over the trades, the pairs and the opportunities, and see how we can take advantage of it. Okay, let's start with the euro dollar, which from my point of view remains bearish. There is no change here. There is no bullish divergence on a daily chart. The pair is creating second wave down, and I believe it could continue all the way to 116, 115, maybe even lower zone. We had this double cycle. It was pretty classical cycle. So the final target is here, 114. We had a double cycle before, which is right here. So we at least aim the 116 zone. Okay, so that's for the euro dollar. I would remain short in my mind as long as this trend line holds and we continue straight to create lower highs and lower lows. I would remain bearish in my mind as long as this top holds. Pound dollar is a very interesting one, a pair that I would be starting looking for the buy opportunities, but not there. 128, maybe even 127 zone, and I'm talking about this double cycle that is building up, and the correction of the daily, this tria. Okay, we have this tria, so we are coming to this zone. It could have actually even take us to 126 area, where from I believe we are going to have heavy buys. But currently, for me, as long as this top holds around the 130, every rally should keep us bearish. I believe we are going to the as I said, 128, 127, most likely even the 126 area before we switch. Euro pound. Well, this one is a really interesting pair. We know the levels. Now, technically, according to the monthly and the weekly cycles, we have 094, 095 area. Oh, sorry guys, still not the best. And this is what we currently have now. This level what we have right now is already important, because I'll show you, this is a daily cycle, because we have two false breaks here, and if this low right here would be broken down, what we are doing from here is looking to sell the rallies for this correction. Okay, now if we continue the rally, our biggest cycle is this, remember? And the level there is 0.94, 0.95. It's actually even a bit higher here. Okay, but currently this is what we have, and this is why the zone we already have is so important. We had this special cycle before, correction, and we had this double cycle up, and it takes us to the 61.8. And this is why, from my point of view, in this current zone, we will definitely see some kind of opportunity for the correction. After that, there is a good chance we are going to the 0.94 or higher, according to the weekly monthly cycles. But these levels are so good already, so we can definitely look for short. And the best way to do that would be if we go below this low, as I showed before, because that's where I expected to regain the bearish momentum from. So break below here, that's 0.9049 zone. Break below, retrace, and we can talk about sell rallies. Next one on the list, now let's start talk about the Pacifics, because they are very interesting. New Zealand dollar, 0.72, 0.71 is the zone where I expect the action to begin. We had one false break here, second false break might appear in that area. If we get a break above this trend line, it should be in triple cycle, so 1 2 3 1 2, and only then with the breakout of the trend line we should be looking for the buy opportunities. Now if we drop to the 1 hour chart, currently what we have kind of a 1 2 developing, maybe that's gonna be 3. It could also turn to be a special cycle, where from we would be looking to get 2 waves correction, and then with the break above it, like here, we are going to enter these buy opportunities. Now if it reverses lower, we will be looking for the same principle again, one more false break, higher highs, trendline breakout, and with the retrace to buy. Okay, there is good chance we are going to see that even below the 0.72, maybe even around 0.71 before the buys really take control. Now Aussie dollar is correcting nicely and doing pretty much the same. Triple cycle, actually it's more like a special cycle here. That's what we've had, 1 big 2 3, so that's definitely acceptable, where from I would not be surprised to get one more leg to the downside. Now the only way to change that view is if we break above this high in triple cycle by itself, create the 2 waves down correction, and then with the break of it, if another break happens here, that's a changing direction, because that means we would be able to start rallying to the new highs around 0.81 or maybe even 0.82. So I would playing very careful if that scenario happened. So keep an eye there. As long as it didn't happen, view is sell rallies. Dollar franc is another very interesting pair from my point of view, and the way it looks, the pair has all the reasons to continue higher. It's still holding this range, so I would not be surprised if we are going to the parity level once again. We had our view a week ago, if you remember, that this cycle 1 2 3 should be corrected by 2 waves down, and it was right here, 1 2, and with the break of it, the rally continues. So as long as this low holds, for me it is buy retraces. and I expect this pair to rally towards 0.99 or parity level even. So I would remain bullish as long as we hold this low. Now dollar yen, well, this one is a bit of mystery, but I'll try to make it simple. As long as this range holds, I believe this pair is going still for a rally. So some kind of retraces and one more push upside, definitely doable as long as this low holds. I don't have real clear view here, but that's what I would be looking to deal with. Let's continue. Where is my next one? This one. Pound Canadian. A mystery, right? But this pair still provides us the opportunities we wanted to do with. Still has this cycle for us. Now this might turn to be the bigger third leg, which means we can still cross below this low and get closer to the previous lows. Now, as long as it's developing, I wouldn't be rushing to go for buys, but after crossing the previous low, if that will be the case, this is the trend line we need to draw. Let me just find the line to be broken. So basically, if that's what happening here, that's what we need to do. Break off the trend line and then buy the retraces. As long as it didn't happen, and since the last range here was broken, no reason to fight it. Let it go. Probably the cycle is just not fully ready yet. Next one I wanted to cover, that would actually be gold and silver. Actually gold, silver just following. We're still in the range, and as long as it's holding this range, my view remains kind of bearish here. So this beautiful scenario is like that. 1, 2, range 3 probably, and after that we should be looking to sell rallies. As long as this top right here holds, we need to look in bearish views to sell rallies. Only break above this top will change the view here and the technical setup. And that's actually, let me just check. Yep, that's actually all we have for today. Indices, S&P created for us the 2 false break scenario. 1, 2, previous week created this convergence for us, now making this turn. As long as this top holds, the view remains bearish, and if you want to play that safer, we need a false break, lower lows, 2 waves retrace, breakout for a sell. Well, unless you are investing, and that's a different story and approach, of course. Next one is the oil, which I'm looking for continuous buys, looking and waiting for this bullish hit and divergence to form. By ideal, we get here a false break with divergence and start the rally. But there is a chance that we already in a good buy, because we did have false break on the 1 hour chart with convergence. So if this is going to turn to be a range, we are going to look to buy the breakout of this one. And after that scenario, I would expect the previous highs of the daily to be reached. I wouldn't be surprised to see one more low actually for a false break. That would be technically very good. Let me see. No, that's all. Yep. So that's what we have. Don't try to be a hero before the FOMC. Simply waste of time. You know that there are no heroes when it comes to market, right? So just listen to what the market tells and go with its direction. That's the smartest thing to do. That's the best thing we can do as traders. Just follow what the market gives us. Don't try to convince the market that you are right. Follow of what it tells you. Thank you for watching. and I'll see you again tomorrow, hopefully with better voice. Thanks for your time. Bye for now.